Back to the channel, guys. So look at Novonix, look at it go, but today was a hard day at that. So even though you've looked at the month, oh, it's actually down for the month. So if you look at 6 months, it's quite a way up. So anyway, today I've been selling them off as they've been going up, selling out my position a little bit, saying, oh, yep, done well. And today it went down 10%. I was like, I'll sell out. It's another little bit of it. And then I was thinking, you know what? I know what I think they're worth, judging by how much graphite they're going to make in the years to come. I know how much the graphite they're making at the moment. And to me, it seemed this price was well ahead of where they were at the moment. Even though in the future I think they can still grow past this if they get the anode out of the ground, anode business running, and the cathode side running. And who knows, from there they can go even better. But that price of $12, I think I sold out around, well, I was in Perth, so it was about 10 a.m., so it might have been 12 a.m. Got out around here, and then it seems to be pretty good because I made, when I bought them, was even actually way down here. They've become a big part of my portfolio, so the green days were good, but the red days were pretty hard to watch. Especially that's why I sold out, because I thought, well, it's going down, and I knew it was quite high for what they've done so far. Not to say in the future they won't grow more, but what I do with investing now is I like to get a stock. So when they were down at $1, I looked at how much anode material they would make per year, how much they would make off that. It was like $500 million a year they could make off it, and they were selling. The whole company was selling for $500 million, and I knew that they knew what to do with batteries, judging by they make the testing equipment for other battery makers, so they knew what worked in a battery. And I thought, well, if they only do half of 500 million and could do 250 million, that's a pretty good buy for $500 million when I bought them. And then they went up and up, and then it just got a bit ridiculous, in my opinion. Say that, who knows, they could grow, and I could say, oh damn, I sold, but at least I can look back at this year and say I sold because I was uncomfortable with it. It was quite a big part of my position, of my portfolio, and that's just why I sold. So if they went to $5, I might buy back in a bit. Although I'm happy just to sit out, like Warren Buffett says, you can just sit on the fence and wait for the perfect pitch. Okay, so that's all I'll say for Novonix. Um, they look pretty good. They'll probably bring out an announcement with Tesla soon because Tesla's going to need their graphite. Graphite seems to be one of those materials like lithium. We didn't need lithium. Like copper, there was always copper miners around for other things. Nickel miners the same. Lithium, there wasn't anyone looking for that much lithium. Now there is, and that's probably the same with graphite. So if you look at this Talga, they're like Novonix, except they don't have probably the brains that they can test the batteries themselves to see how good they are. And, well, they probably do, I don't know. But these guys say they're going to print money. They're going to spend $200 million to build the plant and print out like 200 million. Their market cap is 400 million. I'm not going to buy into them. I'm not really enticed by them. I'm just saying that graphite is all there. So I like to buy a small company that can grow big. And the best company I know here today is E3 Metals, which I've done multiple videos on them. It's funny because when a stock goes down, so I bought them up here $3. They've gone down. I thought, oh, have I done the right thing? Well, if you look to a Novonix chart when I bought them, it went to $2 and came back down. And the people buying at $2 then were saying, oh, have I done the right thing? They could have sold out and missed out on a 5x. So if you follow the company up the chart, you've probably got a better chance. So I'll do it as simply as possible what E3 Metals does. So this is an oil field here. Underneath this is a big thing of water, which that water contains like less than 1% lithium. So they pump out the water and they separate the lithium from the water, and they make a lot of money if they do what they say they're going to do. So where are we? Investor Center. So basically, if these guys say what they're going to do, you can buy this whole company now for $100 million at the last traded price, 132 million. So if they say what they're going to do and they make 20,000 tons per year at a cost of 3,500 per ton and sell it for 26,000, it's like $400 million profit each year. That's after spending. Also, another thing you want to look at when buying any company is the Capex, because if these guys have to raise $700 million to do that, it's going to dilute the share price quite a lot. So, but the other good thing about this, they don't have to go 20,000 tons per straight away and raise 700 million. They can actually start off at 5,000 tons and raise less money, meaning dilute the share price less, prove that out, and then they can get better loaning, better terms on their finance. That's just my opinion. Anyway, so they do 20,000 tons per year. They make $400 million a year. It's going to make this market cap look small. This company is going to go bananas. And take in mind, after they do 20,000 tons per year, they can keep scaling this up to 150,000 tons per year. So if you do the maths on 150,000, we'll do it now. So they do 150,000 tons of lithium. Let's just say they make 10,000 a ton. You can probably do this in your head. I'm not that smart. $1.5 billion. So if they even achieve half that, 700 million a year, to a markup now of 100 million, it's going to be, if they do a quarter of that, it's going to be pretty good. So the risk reward is worth it, and then you can even make it less risky for yourself by only putting like 10 or 20% of your portfolio in, depending on how good you think this company is going to go. So E3 Metals is my next favorite. They just bring out this thing saying, so what they're doing now is they're in the lab, because when the water comes through this thing, they have these beads, and the beads attract the lithium. So the water comes through, the lithium gets stuck to these beads, and then they wash the lithium off the beads another way, and get the lithium, and then turn it to lithium hydroxide. And they can do it that for, they say, 3,500 tons per annum, which is very cheap compared to anyone else who can do it. So what is it saying? So at the moment they're testing in the lab how good they can do that with the beads. They're testing the best beads or the best, I don't know what it's in there. Let's just go this blood test. Why is that not doing that? Here we are. You can read this yourself. Initial series of 11 tests were conducted ahead of multi-cycle tests to determine operating parameters for long-run program. So they're just seeing what works best before they go out and spend 10, 20 million on the pilot. I don't know how much they spend, but they spend a lot of money building this pilot thing. It's millions of dollars, so you want to get it pretty right before you do that. So they say what works best in the lab, and then they take what works best in the lab out into the field and test it in the pilot. So that's where they're at now. So once they get these tests done, they're happy with what's working the best. They build the pilot, and away we go. So no one's really proved DLE technology, which is, in layman's terms, speaking to a dumb person, getting lithium out of water or brine that's in the ground underneath. So that's just this company. So if they don't work, I've only put like 10% of my portfolio in there. And if they do work, that they're gonna shoot up like, if these guys do it, they're gonna shoot up like 10. Well, if they're making $700 million a year, and they're gonna shoot up a lot. I don't know. Who cares? It's gonna be bigger than what they are now. We've got Tolga Group. They've just gone down because someone lapsed a notice to do business with them. But saying that, they didn't really go down because they just shot up and then are coming back down. So that's me. I like to invest in something small where I can clearly see in the future they're going to do well or could do well. And I checked them over 3 times. I've watched a lot of interviews on this guy, the CEO. He says he's invested money into it, but I couldn't actually find how much he invested in there. But I think he got some options and he sold off the options, and so who knows. That's why you don't put all your money there unless you could actually go to their lab and see how good it was working. That's why it's good to see them putting money, because they're actually in the lab and they can see it working. But for us who can't go to the lab, you just have to watch interviews and read these things here, and then do other research on DLE, and then cross-check it against what this guy's saying to see if what he's saying is right. Another guy said these guys he's like, oh well, E3 metals, they might do it for 4,000 a ton, or they could do it for 8,000 a ton. Even if E3 metals does it at 8,000 a ton, they're still going to do pretty well, um, in my opinion. And yeah, that's all I can say. Other companies I bought into, Winsome Resources. So the reason I bought in these guys because they're doing a hard rock project which is actually being done now at scale. So DLE isn't being done at scale yet. Hard rock mining is being done at scale, at massive scale now. So these guys, reason I bought into them is because when I bought into them around here, I think I got them at 26 cents. Just quite strange. That, yeah, I got them around 26 cents. And I think that was a $30 million market cap, and you got $20 million of cash. So you pay $30 million for the company, you get $20 million in cash for drilling, and you get these areas that you own the tenements on. So basically, for these guys, they're going to drill this out, find where the lithium is. If you see all around here, these companies have lithium, so no doubt there's going to be lithium here, because lithium is everywhere in the world. It's really abundant. You just got to find where it's concentrated and get out of the ground. So these guys have 1 to 2% lithium. E3 Metals has like, well, 10,000 parts per million is 1%, and E3 Metals only has like 90 parts per million or something like that. So they have like a lot, like a thousand. They don't have much either, but they're getting it out of water. Not yet prudent scale. These guys are prudent scale. So these guys can drill it out. They spend $100 million on the mine, and after they spend that $100 million, they can make spodumene at $300 a ton, and they might be able to sell it for $1,000 a ton, depending. The spot price of spodumene selling at $2,000 a ton, but if you have an agreement with someone, they get a better deal, so they might get $1,000. So these guys make $700 a ton, say raw figures, and they do 50,000 tons a year of the ore. What did I say? 700. $35 million a year. So if they drill it out, this thing here, and build the mine for 100 million, they don't have to dilute the share price that much with the 100 million. Not like E3 Metals has to raise like 700 million, or they can actually start smaller. These guys can start off a lot smaller and start making money. So what I say, yeah, so they spend $100 million and then they can make $35 million a year, given that lithium stays good. And they've also got these main roads here, and they've got hydropower running right through their thing. So hydropower is the cheapest power around. I know wind power and solar is closing the gap, getting cheaper, but it's a green hydropower going through there, so it's a green mine. Years to come, they'll get green dump trucks that run electricity. Who knows? So these guys are a pretty good thing. Good example. So these guys can drill it out. Say it's going to make money, raise the money. They could go like CXO. So CXO have drilled it out. They've done the study and they've raised money, and now they're starting to build the mine, and they've taken off quite a bit. So they're $800 million. Winsome is about 30 million, 30 or 40 million now. You'd have to track down the market cap and something else, but I know it's about between 40 and 60 million. It wouldn't be any more than 60 million because I think it was 30 million when they came out, so it's maybe double that. So maybe around 60 or less. So they got a lot of growth to catch up to CXO, although I wouldn't be buying CXO because I think they're quite expensive for what they've done at the moment. So I like to buy companies before they grow and sell out when they've grown, or their price gets ahead. So that's why you don't look at the chart, you look at how much they can roughly make in the background. This is my way of investing, and you sell out at the top. But then there's other things like Amazon. If you just hold, they probably looked expensive. Like Amazon looked expensive here, and it dropped right down. But if you kept holding, who knows, it could have gone up. So, but you wouldn't have lost if you sold out then. Like, look at say you sold out here because it got ahead of itself. if you hold on, you would have made a 2x, but if you sold out and did it again in another company, grown small and big, you could have then increased that more and more multiples. That's just my opinion. Like, why not sell out of the company that's done well, and then try and do it again on another small fish that grows into a large one. Like, you buy the goldfish, sorry, you buy the barramundi, you feed it, you sell it big, and you do it again. Just my way of investing. Don't hate me if you hate me. I don't know. So that's it from me. Any good stocks you have that are small fish that can grow into large ones, give me all the information you can about them, so I'm very interested. Small fish that can grow into a large one. Don't hate me because I sold out all my Novonix. Don't know where the future's going to go. They could go crazy. 3 billion actually looks very small if you compare it to CATL. But is that a $1 trillion company? Market cap. I know. Well, CAT is a lot higher than that. Don't tell me it's 1 trillion. No USD. I'm pretty sure it's $250 billion. So Novonix still looks small to them. You have to convert that CNY to USD. I think it's around 250. Let's just take that as a rough figure. Even say it's 200 million, less than that, who cares? So NVX, ASX, yeah, these guys can still grow bigger, but I don't know. It's just seems more risky to me. Who knows? They could do the anode, kill that, come out with the cathode, kill that, come out, and don't think Novonix isn't making like a solid state in the background. They're probably testing to make a solid state. They're testing silicon anodes. They make the equipment that test the batteries, so they're testing silicon anodes. They're gonna start off with the anode, go to the cathode, go to the quantum scape, go to the solid state battery. Novonix is no doubt doing that in the background as well. Market cap. Take in mind these guys are worth 11 billion and they didn't have, and Novonix is sort of ahead of them. Who knows? But I just don't know. So you don't go break making a profit. Don't hate me because I sold Novonix. They can still go well. I just got scared. If they go back to $5, I might buy a bit in again, maybe 10% of my portfolio. But I'm happy to watch it. If it goes up, I'll just say, oh, made money there. Who cares? So that's it from me. Send me your stocks that you like. Any stocks, I'll give you my honest opinion. If it's crap, I'll say that's just shit. And if I'm wrong, then I'm wrong. But it's just my opinion. I'll give you my opinion on a stock. And send me good stocks, because I got sent some good ones like GT1. Oh, they've gone down a bit, 10%. So these guys are the same, sort of same as Winsome Resources. I think they're around $80 million. So you can get Winsome for, well, when I bought it was right $40 million, or you buy these guys for $80 million. Getting a similar company. That's why I bought Winsome. But if this goes down further, might like to buy into them. Because I think these guys, Green Technology, have some good guys in the company as well who've done lithium mining before. So they're on the watch list. Take off. Da 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 da. So send me your companies and see you in the next video. Thumbs up if you like this information. I'm not going to bother editing any of these videos because that's just a waste of my time. I'd rather blubber on. Maybe when I get some more subscribers I will do that. And it'd be good to start interviewing some companies too. You know, if you want to yourself, you can ring up any other companies, email them, get the information out of them. But yeah, wouldn't it be good to have an interviewing ASX company so I could ask the hard questions to the people in the know. So that's it from me. Thumbs up in these videos, and who knows, you might see me interviewing some big players. Chris, what's his name? Chris Burns, Novonix. And then I can ask Chris Burns, like, are you guys doing solid state in the background? Are you guys doing silicon doping? And he'll say, oh, can't say it. But anyway, give me some thumbs up, and I might interview Chris Burns. I guess this guy's interviewed Chris Burns, and he's into Lake Resources guy. And also another thing about E3 metals, Lake Resources, DLE not proven at scale yet, and Lake Resources is almost $1 billion company, where E3 metals, they own the technology and the resource, and have just as big as resource as Lake. So why would you buy Lake Resources for a billion, where if you did some study, it looks to me that E3 metals is quite similar. These guys probably have 400 parts per million to E3 metals, 100 parts per million, so maybe they have to pump less water to get through lithium. But there could be other challenges as well, who knows. And then there's also standard lithium, where some guys say, oh, standard lithium is great, it's going to go gangbusters. And they're a $2 billion company. But why buy the $2 billion company when you can buy the $100 million company that can grow as big as these guys? It's just my opinion. The only thing with E3 metals, standard lithium, they're on the back, so this company is pumping water out of the ground, getting the bromine from it, and then standard lithium will take lithium out that, so they don't have to build the thing that pumps it out of the ground. Although E3 metals doesn't have to build it either, because they're using old oil rigs that pump the brine out of the ground to get oil out, so E3 metals can save money there doing that. So it's just my opinion. Why would you buy Lake for $1 billion or standard lithium for $2 billion when you can have a shot on E3 metals? Because DLE is not proven at scale yet. If you think it is, comment below. I think some companies are doing it like Livent, but it's hard to find information on it. So yeah, I think I'm actually going to try and leave this conversation now, and we'll see you in the next video. Thoughts below, thumbs up, subscribe, like, tell your girlfriend, tell your mum, tell your grandma, your hot auntie, and I'll see you in the next one.